The impact of inflation on your stock portfolio. Strategies to beat it. Inflation, the relentless rise in the general price level of goods and services over time, is an economic force that can have a profound impact on your stock portfolio. For investors, understanding the consequences of inflation and having strategies to mitigate its eroding effects on the real value of investments is crucial. The inflation conundrum. Inflation, an intricate economic phenomenon, exerts a pervasive influence on your stock portfolio. Its implications are wide-ranging and multifaceted, encompassing not only the erosion of purchasing power, but also more subtle effects on various components of your investment holdings. Inflation's most straightforward impact lies in its capacity to gradually chip away at the purchasing power of your money. As prices inexorably climb upward, a fixed sum of money possesses a diminishing capability to procure goods and services. From an investment perspective, this means that the future value of your investments, when assessed in real terms, could potentially fall short of their current nominal worth. Fixed income investments, such as bonds, are susceptible to the deleterious effects of inflation. In an inflationary environment, the real yields on these investments may be diminished, ultimately impinging on their attractiveness. Bond investors must grapple with the unsettling prospect of their fixed interest payments having diminished purchasing power in the future. Stocks as an inflation hedge. Despite the challenges posed by inflation, stocks have emerged as a potential hedge against its corrosive effects. The dynamism of the stock market and the flexibility of equities can render them an advantageous choice for investors seeking to protect their wealth and potentially garner returns that outpace inflation. Stocks represent ownership stakes in companies, and these businesses often possess the ability to adjust their operations and pricing strategies in response to inflation. Furthermore, stocks are commonly linked to real assets, such as factories, real estate, and infrastructure, which can appreciate in value over time and serve as an effective hedge against rising prices. Many stocks offer the enticing prospect of dividend payments, which can rise over time. These dividend increases not only augment the total return on investment, but also have the potential to outstrip inflation. Investors who select stocks from companies with a track record of consistent dividend growth may find themselves in a favorable position. Sector and industry selection. When considering the impact of inflation on your stock portfolio, a judicious approach involves sector and industry selection. Some sectors and industries have historically demonstrated greater resilience in the face of inflation, making them potential candidates for your investment consideration. Certain sectors are often deemed defensive in the context of inflation. These sectors include utilities, consumer staples, healthcare, and real estate. Companies within these sectors tend to provide products and services that are less sensitive to economic fluctuations and can maintain stable cash flows in inflationary environments. Investing in companies associated with commodities and natural resources can be a strategic move in an inflationary setting. These assets often appreciate in value as inflation drives up the prices of raw materials. As such, stocks within the energy, mining, and agriculture sectors can offer an effective hedge against inflation. Diversification strategies. Diversification is a fundamental principle in investment strategy, and it holds particular relevance when mitigating the impact of inflation. A well-structured and diversified portfolio can enhance your resilience in the face of inflation and potentially augment your risk-adjusted returns. Diversification encompasses the allocation of assets across various categories, including stocks, bonds, real estate, and commodities. This diversified approach can help balance risk and return while reducing the vulnerability of the portfolio to the erosive effects of inflation. Expanding your investment horizons beyond domestic markets through international diversification can provide an additional layer of protection against inflation. Different countries may experience varying rates of inflation, and a globally diversified portfolio can potentially harness opportunities while mitigating risks. The role of inflation-protected securities. Inflation-protected securities, such as Treasury Inflation-Protected Securities (TIPS), are specifically designed to safeguard investors against the detrimental effects of rising prices. These securities offer an attractive way to counteract inflation's impact on your fixed income investments. TIPS, for instance, adjust their principal value in line with changes in the Consumer Price Index (CPI). This feature guarantees that your investment retains its purchasing power as the principal value increases with inflation. TIPS provide a fixed rate of interest on the inflation-adjusted principal, ensuring that investors receive consistent income payments. This feature sets them apart from traditional fixed income securities, where the purchasing power of interest payments can be eroded by inflation. Reinvesting dividends and capital gains. In an inflationary environment, the reinvestment of dividends and capital gains can be a potent strategy to enhance your portfolio's resilience and returns. This approach allows you to capitalize on the power of compounding and accumulate additional assets that may potentially outpace inflation. Reinvesting dividends and capital gains can lead to the compounding growth of your investment holdings. As your portfolio appreciates, its capacity to generate income and gains increases, which can aid in countering the adverse effects of inflation. Regularly reinvesting dividends and capital gains, particularly during market downturns, can implement a dollar-cost averaging strategy. This approach involves buying more shares when prices are lower, which can enhance your overall return potential while mitigating the impact of inflation. Active portfolio management. Inflation's dynamic nature necessitates active portfolio management. Adapting your investment strategy to changing economic conditions and monitoring your portfolio's performance is essential for addressing the ongoing challenges posed by inflation. Regularly review your portfolio to ensure that your asset allocation aligns with your investment objectives and risk tolerance. Adjust your portfolio as needed to respond to shifting market conditions and inflation expectations. Stay informed about inflation forecasts and economic indicators. Being aware of the prevailing and projected inflation rates can inform your investment decisions and help you make timely adjustments to your portfolio. Long-term perspective. An enduring and effective strategy for mitigating the impact of inflation on your stock portfolio is to maintain a long-term perspective. Short-term fluctuations and market volatility can be less impactful when your investment horizon spans several years or even decades. Over the long term, the stock market has historically outpaced the rate of inflation, resulting in positive real returns for investors. By remaining committed to your long-term investment goals, you can potentially harness the compounding power of equities to counteract inflation's effects. A long-term perspective requires patience and discipline. Avoid reactionary decisions during short-term market fluctuations driven by inflation concerns. Stay focused on your investment plan and objectives. Strategies for resilience and prosperity. Inflation is an enduring economic force that demands prudent consideration and strategic planning from investors. The impact of inflation on your stock portfolio is multifaceted, touching upon the erosion of purchasing power, the behavior of bonds, and the resilience of different sectors and industries. However, with a well-structured approach, you can not only protect your wealth but also potentially enhance it in an inflationary environment. Stocks, with their capacity for growth and adaptability, stand as a potential hedge against inflation. Careful sector and industry selection, diversification strategies, and the inclusion of inflation-protected securities can bolster your portfolio's resilience. So guys, let me know your thoughts in the comments section below. For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.